Record. Welcome to Momentum Monday. Today is June 18, 2023. Happy Father's Day to all fathers. Howard, how are you spending Father's Day?
I'm in Coronado for the summer, waiting on you to get back. I am the house, we had a leak, so the house is, maybe you can hear an echo, maybe it's not great, but we've got great Wi-Fi. But I'm living in a half-built, remodeled, it wasn't redone, it was remodeled our house in Coronado. You've been here. We had a lot of water damage from a stupid leak. So my wife
Can you live at the beach though?
I just went for my first run since the last, I don't run anymore unless it's here, and I just had my first run. Nice. The beach is closed because the fucking
yeah. I heard that.
So that's a whole nother story, but people should read up on this. It's really a shame because this has been happening for what, decade or two. The water sewage from Mexico, medical sewage and stuff. And I think they have most of the money raised, but we keep talking about the border, but this is part of the border, and our beaches are shut. California's southern, it's the water flows are making it such, Imperial Beach. What's really a shame is it's a fucking Navy base. Like, our Navy SEALs can't go in the water. Like, I don't understand how this could get this screwed up, but that is the government, unfortunately, not doing its job here in California. So anyways, and I'm actually seeing it. Some friends buy some property here at reduced prices. So people are like freaking. The Dell is like, no one can go in the water at one of the fanciest hotels in the country. It's very interesting.
Yeah.
But it doesn't affect the queues. Yeah,
it doesn't affect the queues. Nothing is affecting the queues. I mean, even the Federal Reserve interest rates are, as we know, at 5.25. The market doesn't care. It just keeps going higher. The Federal Reserve.
Pull up the 10-year. Pull up the 10-year. It looks like it's going to go higher.
All right, this is monthly, so it's like 20-something years.
No, the 10-year.
Oh, the yield. I don't think I'll be able to pull it up on this.
No, but TLT. Just pull up TLT.
TLT, that's more like 20+ years. But yeah, this is longer term, Howard.
Yeah, 20-year. But you can just see how heavy this is. There's no bounce, meaning
usually the
rates are going higher. Rates are going higher. The 10-year is going higher. I'd be shocked. So
yeah, I mean, it's very interesting because last year we had that opposite correlation. When the rates were going higher, the tech stocks were getting pounded, and this year they really don't care. They just, it seems like the market is.
They don't care right now, right? Like, they don't care right now. The rates do matter, and this could be one of the great. Listen, I've participated in this, even though I'm underinvested, as everybody knows, but I'm itching. I was selling some calls against some of my FANG.
But maybe high rates, Howard, they have basically forced companies to become a lot leaner and more efficient. They laid people off. They reduced expenses, and in general,
now they have to grow, and their valuations are high. So don't get me wrong, I agree with you. But this could be a great suckers rally here.
We are almost at all-time highs, Howard.
Well, we are in the XLK. Like, this Qs has a lot of
XLK. Let's see. Yeah, almost there.
No, we're there. That's a closing high on the XLK, dude.
Let's see.
That's a closing monthly high right now.
Almost covered. Let's see. Doesn't matter, but basically there. Yeah. I mean, SMH is almost there. Like, no one really saw that at the beginning of the year, and just step by step, it's basically a slow motion melt up, which the markets have almost.
It's fun. Listen, it's a reminder to young people that, like, index. I've been really on this case of, like, what's next? Like, what we got. I knew that the do-it-yourself is not going to go away, Ivan. You're a do-it-yourself. You're a lifer, maybe until you're my age. And now that I've become an indexer, I hate it. Like, I love the idea of being in the queues, but I also hate it because there's 10 or 20 companies that I know, So I'm really a big fan of this unpicking trend, where if you can't beat them, join them, but still have the thrill of being in charge of your portfolio by unpicking 5 companies. And now there's some companies, I don't think it's venture type businesses in fintech, but I do think we're getting to that point even where Vanguard has survived long enough to they will allow you to deselect 5 companies. Because if you took the banks out of the S&P 500, which is a pretty obvious bet, which I did in my unpicking portfolio, it's flat this year. So you at least feel like I didn't have to own the companies I hated. And that is a form of stock picking, which I'm going to keep going down this path and looking for the ways to express this. But much easier than deciding when to be in and out of the market is just to say, I want to be in the market, but I hate these companies. And much easier than picking which companies you like is picking which companies that you think will underperform. So it's a thesis that as a 58-year-old, I'm pursuing.
It's an interesting approach. Like, to me, it's equally hard to pick the ones that I think we all perform.
I'm not saying it's easier. I'm saying it'll be more fulfilling in the sense that you still own the index. It's not you taking out 5 companies, Ivan, is not going to make you underperform by 40% in an index of 500 companies. It just allows you to deselect companies that you absolutely do not want to do business with that are in the S&P 500. And I bet you out of the S&P 500, if you really drill down, forgetting ESG, if you really drill down, there'd be 400 companies that you fucking can't believe that you're owning their stock.
Yeah.
And that's impossible because then you might as well stock pick. But I think it starts with people voting. And I think we're going to get someone who's seen StockTwits and read everybody like try and say.com and Robinhood and see these cycles happen so often and often. I think we're going to get closer to a time where it's just a different form of picking stock. But anyways.
Yeah, I mean, you make some good points. To me personally, if you really own more than 7 stocks, you might just as well index.
Another good point, which is like, when Apple has 10 of the biggest business lines, their 10 biggest business lines are bigger than most companies. Therefore, maybe owning more than Apple is you're over diversified. You might be over diversified if you want to own the S&P.
Yeah, exactly.
Yeah.
So in terms of
so walk me through what I was going to say. The only 2 things that I see that have held up the best. So I wanted to talk about today the XLV, which kind of held up the best. Well, the tech's corrected.
What do you mean corrected? Like, you mean Friday?
Well, last year.
Oh, right? Last year, yeah. I mean, it's a defensive sector, so obviously we'll outperform during down years.
But there's a lot of tech now in that, and IHI is another one. And so if the market, I'm saying if the rally continues, I think you're going to see a rotation.
But these are the devices. Yeah, the devices are breaking out just for the simple reasons that, last week, all the health insurance companies, they broke down because they mentioned that all of a sudden, all those people that postponed operations and surgeries during COVID are now doing them. Yeah. And this is why all the medical devices companies are all of a sudden breaking out, like Intuitive Surgical, and you already mentioned IHI, which is the ETF, and we have some others, Align, I guess, and
McKesson was breaking out MCK to all-time highs.
Yeah, definitely on Friday, MCK. Let's see some others like NNOX, PACB. Like, these are not.
I guess you'd have to look through the index on Koifin if
popular. Yeah, definitely. Yeah, that's a really good shortcut.
Yeah, so if you go to Koifin and just search IHI, you can. I don't know, even if you have it open, you can just search.
Yeah, I mean, I haven't used it lately, but yeah, we can try it. I guess.
So if you go to Koifin and just search IHI, you can just easily go see which companies make up the indexes. It's a really good shortcut for people. If you're not signed in, I can do it.
Maybe it'll be easier if you do it because I haven't signed it in a while. Do you want to share your own? Okay, let's see.
Okay, sign in. If you go to IHI, type in IHI and go IHI Holdings. Type in
IHI. And then
just type it, just click it. And then you can go to Holdings, which if you scroll down.
Okay.
I think it should be there.
Let's see, trailer search.
If you go IHI space H, it should be there, but I know it's, you got to go back up to the search bar.
This is a search bar. Let's see, search.
No, the search at the top.
Okay, here.
Yeah, sorry. Go IHI space H.
Space H, okay.
Should show holdings, enter. Scroll down a
So
little bit. Sorry, buddy. Just scroll
it's
down.
just
There it is,
showing a bunch.
holdings. There was holdings there if you scroll back up.
Oh,
There it
right
is.
here.
HDF, sorry, not H. These are all Bloomberg functions? Oh, you're
Sorry, I'm not using it. So,
okay, so you do have to pay, but this is a great feature.
but you
for
can share on your own
money.
screen if you want to. Do you want to share?
Nah, people now know they went to Koifin, but yeah, it's a great feature.
Okay.
But anyways, so the medical devices look, if we're going to rally, and I think this could benefit. I think the XLV could benefit, but you know, in the end, like I said, if I own Apple and you own Google and you know one other of the FANG stocks, you pretty much have.
Yeah, probably outperforming significantly. I mean, the Qs are up almost 40% year to date.
I
So
think
it's
the big story is Google lagging, which makes sense. Everybody's still skeptical that, you know, ChatGPT is going to destroy their business. And there's good reason. Microsoft's at all-time highs. The market's voting, saying
yeah,
Microsoft's got the edge here. You know, we'll see.
definitely. Yeah.
We'll see. But I'm super bullish. You know, as I say to people with search, you know, Wells Fargo, you can get your statements digitally, and 50% of people still get their statements by mail. So I think Google's still in the best position.
It's interesting to see how it will affect like service industries, like accounting, for example, because the other day my accountant sent me a letter telling me that if I want to stay with them next year, they were going to double the fee that they charge me, which I still thought was pretty you know, high, which I'm thinking with, you know, ChatGPT and AI, maybe something like I should be able to do my taxes through Intuit, you know, much easier. Like why do I need to pay them so much money? But and they still
Well,
want
you
to
could
double.
go to, you probably, as a non-K1 guy, you could probably go to H&R Block, which is Intuit, and send your trading, you know, your 1099, and it probably isn't that complicated. So you're probably
My tax is pretty complicated. I do have K1 and stuff. So
okay.
yeah.
So if you have K1s, I mean, I don't know what you're paying, but accountants, I pay my accountant to keep me out of trouble. Like I want to you know, I want
to save me time, basically. Yeah.
Yeah. So it all seems like you're saving money until you get it audited. So knock on wood. I mean, that's the goal for me with my accountant, is like keep me out of trouble. Like you can see, you're not hiding revenue, and it's about staying out of trouble. So I don't know. AI will help lawyers and accountants, but you know, right now that's the problem. Their cost of business is going up, Ivan, because they got to manage people. They can't lay off people. They have a busy time of the year and they need people. So hopefully tech will definitely help them. All right. What else is working besides, I think
everything is working.
The industrials broke out, XLI.
Market breadth is definitely improving. We're starting to see even sectors that have been lagging. They're starting to perk up and kind of break out, set up. I mean, yeah. Even stocks like Nike and Starbucks, they've been underperforming. They're starting to bounce. China has been a big dog all year, and they cut rates. Probably the only country that is currently cutting rates.
I wouldn't fight that Fed. I wouldn't. That is like a Fed that makes our Fed look. So if they're going to start pouring money into the world, like you've got a definite. I hate saying it because I may end up just trying a little bit here. Yeah, I think you almost have to. Like
they're building huge bases.
You know where your stop is.
Yeah, definitely.
So that'll probably be my one area. As much as I distrust it, it's hard to fight the Fed. There, and they're printing money.
Shopify setting up, trying to break out. Another one that's in, I think, almost in the same industry. I think they're even partners. GLBE, Global E Online, also trying to break out. Two interesting e-commerce plays. This one from Israel. Yeah. Those two are interesting. What else? I think Melly, for whatever reason, is not doing that well. It's just stuck in a big range, even threatening to break down here. I don't even know why, since all the others are doing so well. Like all the others in Latin America, like for example, Stone, if you look at it, like
a lot of that is driven by the
setting up on multiple time frames.
Yeah, but a lot of that is just driven by the currency too, right? Like dollars.
Yeah. So the inflation in Argentina is more than 100%, the annual inflation. And then look at this one, GGAL, which is an Argentinian bank. is just looking, fantastic on
Wow.
multiple time frames, just breaking out. So it's interesting to see that there.
Yeah, I mean, listen, it's nice to see. I think the real story here about public markets is breadth. I think the real story here is my market, the private markets are forever changed. You had this 15-year period of Facebook, LinkedIn, YouTube, and the iPhone, the cloud. I keep saying it, but idiots like me made their mark. And I'm not stupid, but I'm not a genius. And there was a great era with 0% interest rate. I think this private markets, as we saw with growth funds and crossover funds, and we all got enamored with it or thought they were smarter than they were, myself included. We put different people on pedestals. I think the markets are people want liquidity, especially in an era, especially at a time where you got 5-6% interest rates and a lot of political unrest. Tying your money up for 10 years with people like me, we're the ones that are going to suffer in this type of market because the markets are switching, and maybe it is Latin America, maybe it is China this time, but like the private markets are going to be tougher because the cost of customer acquisition is going up, and the fact is the big tech companies can invest $1 million in an AI founder and an AI engineer, and most startups can. So there's this rapid inflation which we didn't have in Web 2 for talent. And then you also have the cost of customer acquisition of low margin businesses all being attacked. So everybody's in the same business. So I think the public markets are going to be a lot more exciting than people realize, especially assuming rates stay between this 5 and 8%. Above that, I think if the rates surprise higher, I think people will be very sorry that they're extended into stocks.
Yeah,
So,
I mean, inflation seems to be like reducing, so I don't really see a reason for the Fed to raise rates.
Let's be honest, like student loans are coming back August 31st. You have people spent all that money, and if they speculated with it, it's gone. So I think consumer spending is going down, which is lowering inflation. But
yeah,
I'm
definitely one of the factors. Yeah.
But there's still inflation. If you're traveling and flying and going to a nice hotel, it's expensive. And eating out, it's still expensive.
Yeah, it's really interesting to see mortgage rates in the US 7+%, and then in most European countries it's still 2.63%. Like,
oh, is it?
Yeah, it's so much cheaper here. I mean, interest rates here are so much lower. Maybe this is why we're seeing Europe doing so well this year and breaking out near multi-year highs.
Yeah. So I think the big story is going to be, do rates stay contained in this range 5 to 7? I think people are getting used to like, okay, I may not be able to move, I may not be able to upgrade my house, but I'm going to live within this confine. And that's why I go to this degenerate / LVMH economy. The LVMH people can still afford the LVMH, right? So startups will figure out how to sell more products to rich people at higher margin. And the degenerate economy will always exist because people without money want to speculate to become rich. It's that middle, like to go take on Costco or Walmart or Target. Those days are kind of over. Like you want to own the middle, you got to own Costco, Target.
Walmart is looking good.
Yeah. So if you need to like attack the middle of America and you're trying to just own Walmart, right? That is
Costco.
Yeah.
What do you think about the IPO market? Seems very thin still, or only a few new IPOs. I think last week we saw that.
It's still up 30% this year. I know, like forgetting about its distance from all-time high, it's still up almost the same as the Qs, right? So I think that is one that I'm watching, because it could play catch up really fast. It's very thin. And I'm probably going to add some on the next pullback just to have exposure to the IPO market. And I think it could surprise people. Like I said, there's enough companies that are stuck at late stage that have 2 years of runway that if they can grow into their numbers, the IPO market will pick up, right? I think the real trouble is going to be in, you know, the earlier stage. There's not enough great companies being thought through. And then let's look at how wrong people are. Let's pull up Netflix for a sec, Ivan. Didn't everybody think it was dead? It turns out that just the password thing was a huge leak. You know, I have a leak in my house that's costing me a year in my house. You know, Netflix had a leak. If you let people share their password, they figure out a way to share it. And people thought Netflix content sucks. And you know what? Most of it does. I'm not going to argue that. I haven't watched a good show in a while on Netflix, but they locked down the password and people are signing up. There's a record signups, like even more than COVID. Okay. So Netflix is shocked. Netflix could explode. Remember, the thing that Netflix you haven't factored in with Netflix is the LVMH tier of Netflix. They could have a $10,000 a year Netflix product that allows you to participate in movies, go on set. It's kind of like Disneyland for the rest of the world. You know, I was in New York. We had our movie, Ivan. This is not financial advice. It was a fun experience to like go on the carpet and be on the red carpet. And I think there is all kinds of experiences for people that may not have made the movie, but could maybe buy their way in somehow.
Yeah.
And so I think Netflix could surprise a lot more people.
There were some rumors.
What's that?
There were some rumors that Amazon want to buy AMC so they can project their movies.
There's so much. I mean, I get it at some level, because of the library, and I'd go watch 3 hours if the food was good and the seats were good. Maybe I'd go watch 3 hours of a documentary, even old ones, at a big theater with 20 of my friends. So I'm not saying, I do think there's something there. I think AMC is just such a piece of shit asset in terms of the quality of like the food and the experience. But yeah, maybe you could be the Amazon, but right now, movies in the form that they're in, there's just not enough good content, and it's just so easy to stay at home and build your own theater. But yes, I think this digital and physical interaction is just getting started, right? So the Formula One stuff is packed. The Tour de France show was amazing. Did you watch the Tour de France show?
I haven't.
You'll love it. Like, even if you're not a cyclist, you know, this idea of like all these physical activities and seeing people, like the content's amazing. So super bullish.
Ever since I came to Europe, I haven't really watched anything. I'm just watching the market for a few hours a day, and the rest of the time I'm just trying to be out. So I'm just not into.
All right, well, enjoy. I think we've beat a dead horse here.
Yeah.
At least I think we've steered people to stay in the market. You know, it was a really tough year last year, and it's, you know, it's easy to beat yourself up for a kind of sell. I had to sell a stop out of a lot of stuff, but you know, now there's setups.
Yeah.
And you know, but you know, I see a lot of people getting bearish, right? And there's a little bit of chasing going on right now, so I'm a little bit skeptical of how farther we can go here. But
that's a good thing, Howard, because we need skeptics for this subtrend to continue.
A lot of skeptics, but there's some. I see this on stock tweets at extremes. There's a lot of silliness too.
Yeah.
Again, it's not, markets can stay overbought much longer than people imagine, but I'm starting to see.
And people forget that also, you know, just a small 5% pullback in the S&P 500 could mean 20-30% pullback in a momentum stock. You know,
you're chasing Tesla at 260. It could be at 210 tomorrow.
Yeah.
You know, so the question is, if you're going to buy these stocks after they've run 40 to 100%, how are you going to feel if they pull back 20%? So you have to really think that through. They've had tremendous rallies off the bottom. So your entry prices do matter. And I think there's going to continue to be rotation, Ivan. So which is bullish, but the industrials and the healthcare stocks look really good. And I mean, that industrial chart looks fantastic with rates at 5-6%. It's amazing. So these companies have been figuring out stuff. The accountants and the executives figure out how to get these things moving. All right, what about defense stocks? I know they were working all last year. Just to check.
Okay, which ones? Like LMT?
Yeah, so holding up there.
Let's open
Northrop Grumman, NOC.
It's just going, you know. in the middle of nowhere. It's
So
just
they
going
digested,
sideways.
they didn't really
Yeah.
have a pullback during the crash.
Yeah.
Okay.
What
All
was
right, buddy.
the DFN? I don't know.
I
Maybe.
think we've covered a lot.
All right, then see you next week then, I guess.
See you, everybody.
All right, bye.